about this deal is, though, the Scots Trust is still involved. I think they're going to be the largest shareholder.
That's not correct. We are going to be a shareholder, but again, that goes back to exactly what I said, which is that we think this is the best option, the best possible trajectory, the route forward for the Observer, and we wanted to make that route even better. We wanted to make sure that there was a governance structure that was put in place for the new entity that will become the Observer, and we wanted to make sure that the Scott Trust was on that, and we also wanted to invest money from the Scott Trust, again, to further enhance the chances of the Observer. So we identified this as the best option, and then we decided to use Scott Trust funds and Scott Trust expertise to try to make it an even better option, because, as I said, our number one priority here has been ensuring that a 233-year-old newspaper continues. We have to not forget here that in 1998, a previous Scott Trust came very close to shutting down and ending that 230-year-old history. We didn't consider shutting down the Observer. We looked for options to keep it going as a title with all of the history that it brings with us as part of the tradition of British media. Was
this an open process?
Well, we had an approach. We were told constantly that we were getting alternative bids. We looked into all of those letters that were sent to us as the trust. They were also all leaked to newspapers, and we found that none of them were viable bids. They didn't lead us to the identities or to any sums of money or any investors that were legitimate. They seemed very spurious to us. We have not been able to bottom out any of these alternative bids, whereas we had a bid that we believe in. And as I said, we invested further money and expertise from the Scott Trust to further reinforce the legitimate bid that we have in front of us.
The only reason I say that is because Mark Kleiman, our city editor, has broken a story in the last couple of minutes about about Dale Vince, saying that he feels you guys have misrepresented him. Are you saying that you've not misrepresented him, that he's simply not telling the truth?
No, I think he's entitled to his opinion. We looked into that bid. We didn't find it compelling. And for that reason, just to repeat myself, we looked at what the options were, the best options for the Observer, and we concluded that of all the options in front of us, the best option was to go with the bid from Tortoise.
But this is the problem, though. Lots of people think you just haven't done that this is actually quite a cosy deal with people who know each other, and that in the end, I mean, this is not me, by the way, this is some of your own journalists in the own newsroom suggesting this. That's their concern, that actually this has not been a very open and transparent
process. There's been a huge amount of misinformation and falsehood around this whole process. For example, the approach from Dale Vince wasn't a bid. So there's been a great deal of confusion and misinformation. But of course, my colleagues who disagree with this decision, they care just as much as I do about the future of the Observer. And it's understandable that people who have the same objective in mind, who care about a 233-year-old newspaper, might disagree on the best way forward. But this has been a rigorous process with external consultation, with legal advice to bottom out this bid. And as I said, all of our considerations have been, is this the best option for the Observer?
Okay.
I'm an historian. This is a newspaper that emerged into the world when George III was on the throne, and the Prime Minister was William Pitt the Younger. I absolutely, more than anything, care about the future of a brand, of a title that old.
In saying that, do you think at least that it's been handled very well? I mean, here is one Observer staff member speaking to the New Statesman, saying this is a massive slap in the face for everyone on the Observer and the Guardian. They're ploughing on with this. As we were out on strike, morale could not be lower. Clearly, that journalist.
Well, I understand people are very upset. I've seen that in the Guardian today. In terms of timing, what we did was we moved through a process as fast as we possibly could, because we wanted to end we wanted people to know where things were as soon as possible. We didn't want people taking strike action without knowing exactly where things stood, and we have moved as rapidly as we possibly can. People are upset that we met on the day of a strike. We met on a day of a strike to ensure that we could move as quickly as possible in the interests of everybody, including those who went on strike.
Okay.
I don't think this has been a rushed bid. I don't think it's been mismanaged. I think it's an extremely difficult thing to do, and that the Observer and the Guardian are full of people who deeply care about journalism, who deeply care about the British press, and there is just a difference of opinion about the best thing. But everybody here, everybody involved in this, wants the same outcome. What is the best for the Observer and the Guardian?
Just finally on that, I mean, I've been told there was an NUJ meeting today at the Guardian. People are pretty furious, particularly at the editor, Kath Vine. Does she still have the board's full support and will do going forward?
Well, the editor is Kath Viner, not Kath Vine, and
Fine.
she absolutely has the support of the Scott Trust.
OK, David, thank you very much indeed for joining us. Thank you. OK, we're just going to bring you a little bit of breaking news, and that is we can confirm that Volodymyr Zelenskyy, the Ukrainian president, will be in Paris to attend the reopening of the Notre Dame Cathedral. President Zelenskyy, as I say, will be in Paris for the reopening, due to take place tomorrow. Also there, of course, will be Prince William and indeed President-elect Donald Trump. Quite a moment there for Paris, but President Zelenskyy, we confirm, will be there tomorrow. Now, this weekend is expected to be one of the busiest of the year for retailers in the run-up to Christmas. UK households are expected to spend more than £20 billion across the festive season, and small businesses are hoping to get their hands on a quarter of that. Well, joining me now is Michelle Ovens, the Director of Small Business Saturday. Very good afternoon to you. It is a big weekend, isn't it? Just how crucial is the run-up to Christmas for small businesses?
It couldn't be more crucial. In fact, this is called the golden quarter. So this is the part of the year when businesses make their margin for the year. And we know from footfall stats, from retail stats, that November was a little bit kind of slow. So we really need this to pick up this weekend. And it is critical that it does, of course, because small businesses have been operating on really tight margins over the last few years, been a lot of challenges, and we need them. They are a huge stalwart of our communities. You know, we know that, you know, British people love a small business. From our research with American Express, 86% of the public say that they understand the value of small businesses, they love small businesses, but we have to turn that into footfall, we have to turn it into spend so that we have those small businesses next year.
And what is the kind of appeal in the sense of how do you get people through your doors when you have to be up against the strong competition from the household brands and the out-of-town shopping centres and, of course, the online world?
Well, so firstly, small businesses are online as well, and we would always encourage them for a multi-channel approach. I think that the value of small businesses goes way, way beyond comparing costs. And actually, we often find that small businesses are not more expensive, but they provide a lot more. You have a much more personal experience. You'll often know the people running those businesses. There are 16 million people employed by small businesses in the UK and 5.5 million of them. So the chances are that someone you know, someone in your family works for a small business, owns a small business. It's very personal. There are other reasons as well. You know, small businesses more likely to have local supply chains. It's much better for the planet. And if you spend with a small business, it's more like that money is more likely to stay in the local community. So if you don't want to do it for an altruistic reason, do it for a selfish reason, which is you're going to have a great experience. People don't go to a small business and go, oh, they tend to go and go, I found this great new thing. I found this great new business. I've had a great experience. I'm going to go back again.
And Michelle, though, you know, there are pressures now on particularly small businesses, and there will be with tax rises to come, increases in the living wage. Are you and the people that you talk to worried about that?
I think there are definitely concerns, and we have seen confidence dip with businesses this year. But I think we also need to kind of cut through some of the headlines a little bit. A lot of small businesses actually got a tax cut with the budget. National insurance increases were offset for a lot of micro businesses by the growth in employment allowance. In fact, 865,000 businesses won't be paying any national insurance next year, and a whole bunch more have had a tax cut. So I think we need to be very clear and help small businesses understand the changes. I think that there is a concern about, of course, about the growth to minimum wage. But when we talk to small businesses, this is not about they don't want to pay their staff well. And they really understand that their staff are also facing cost of living pressures. But there are a lot of squeezes on, of course, on margins. Around about 16% of small business employees are on a minimum wage. And it's not across all sectors. Retail and hospitality particularly going to be hit. So for another reason why we need to get out, we need to support those small businesses this winter to give them a bit of extra boost to get through that next year. OK. Michelle Ovens, the Director of Small Business Saturday, thank you very much indeed. Now, a busy weekend ahead for retailers there, but
Is it really the end of the spending spree? Is it over already? Because according to new figures from Adobe, UK spenders spent a record amount over the Black Friday weekend, £3.63 billion. That's up more than 5% from the previous year. Well, let's speak to Vivek Pandya, who is the lead analyst at Adobe Digital Insights. Very good afternoon to you, Vivek. Just give us some of the detailed figures that you've seen emerge from last weekend's.
Yes, it's been a really great amount of momentum over these major sales days. So Black Friday saw over £1 billion in spend. That momentum persisted through the weekend. And then we saw Cyber Monday tick up and drive over £495 million. So we are seeing good momentum across that cyber weekend. And season to date, we've seen over £14 billion spent. And that's very much keeping us in line with our forecast for the season of about 6% growth. And that'll amount to about £26 billion over November and December.
Yeah, Vivek, I was just going to ask that. There is a sense that people do seem to be spending money this year.
Yes, when we look across our data set with Adobe Analytics, we're seeing millions of products and transactions, and that drives the momentum over these events and these seasons. So we've seen the sort of eventizing of spend because we're seeing consumers tap into discounts and those moments in order to drive spending. And it's good momentum this year compared to previous years when we saw kind of more flatter growth and negative year-on-year growth in 2022.
Now, the big question I was posing, I don't know if you heard it in the introduction there, are we now shifting our habits in terms of spending? I'm someone who very much leaves Christmas spending till the last minute. And when I say the last minute, I literally mean Christmas Eve. But are most people now spending on Black Friday or over the previous weekend? And that means they're not spending as much in the couple of weekends we've got left before Christmas.
Well, I would say you definitely have different cohorts of consumers who are adapting their spending based on priority. So we have a price-sensitive consumer out there who's really looking to take advantage of these heavy discounts, these major deal days. But then you also have consumers who end up having to just put things off to the last minute, try to see what they can get in the run-up to Christmas, and the shipping implications there as well are also considered. So you have driving forces that are pushing seasonal spend all through November into December. And then we also have a strong moment in Boxing Day where we'll see spend again kick up to almost £500 million. So that really informs what we'll see in terms of how the spend could percolate through the season.
And we're calling it Cyber Weekends. We had Cyber Mondays, you say, Black Friday. Where's the divide now in terms of people buying stuff online? Is that the biggest percentage share, or are people still getting down to the shops?
Well, we're seeing £1 out of every £4 is spent online, and that momentum and that ratio is quite strong. And we see a lot of mobile spending. So about 60% mobile share is happening online. And that really speaks to a consumer who can tap into impulse buys, deals and notifications and really buy things immediately without having to maybe pop over to the shop. But you also have certain consumers who are doing certain things like click and collect and buying some of their products online, picking them up in store, and then maybe buying a few more things once they're in line.
OK, Vivek Pandya, thank you so much indeed for joining us there. Really appreciate it. Thank you. Let's bring you up to date with some of the rest of the business stories on this Friday. And hundreds of jobs at a train factory in County Durham have been given a lifeline after its owners, Hitachi, struck a £500 million deal with the rail operator First Group. The deal will see the plant build 14 new trains with an option for an additional £460 million investment. The future of the plant had been in doubt due to declining orders. A federal appeals court in the United States has ruled in favour of holding a law which could see TikTok banned in the US. The law requires the Chinese-based ByteDance to divest the video app by early next year or face a ban. President-elect Donald Trump has said he won't allow TikTok, which is used by some 170 million Americans, to be banned. OK, we'll take a quick break on Business Live. Coming up in just a couple of minutes, we'll have a roundup of the markets on this Friday afternoon. The FTSE down a little. All the details in just a couple of minutes. Stay tuned.
I'm Siobhan Robbins, Sky's Europe correspondent based here in Berlin.
In Sweden, police have seized a lethal stash.
Anyone of any age could say, I'll do that for £1 million and then have to go and shoot someone.
Yes. Sky News, the full story first. I'm Greg Milam and I'm Sky's Chief North of England correspondent.
This is insane. This was a bustling residential area.
I'm Yusra Al-Bagher, Sky's Africa correspondent based in Johannesburg, South Africa.
How difficult is this to police tonight? Off the scale.
I'm Dan Whitehead, Sky News' West of England and Wales correspondent.
It's a Premier League double derby weekend on USA. First, on Saturday, Liverpool look to strengthen their title run against Everton in the Merseyside derby. Then Sunday, Chelsea aim to stay in the hunt when they face Tottenham in a London derby.
And this meeting might shift the dial in that derby.
The Premier League double derby weekend on USA.
A show of military might and menace. Why should the West trust you?
Frankly, I don't care whether the West trusts us or not.
Sky News. Get the full story first.
Have a quick word for Sky News. Is the West right? Are you fueling Russia's war machine? American journalist Evan Gershkovich is on trial here, but was first on display.
I'm Ivor Bennett, Sky's Moscow correspondent.
Our app gives you the very best of Sky News wherever you are. Breaking news, videos, analysis, up at 6%. Podcasts, watching us live. Joins us live all in one place. And all at just the touch of a screen. The Sky News app. Get the full story first.
I'm Katie Spencer and I'm Sky News' arts and entertainment correspondent. As a team, we've interviewed some of the biggest stars in the world, the likes of Tom Cruise, Brad Pitt, Sir Elton John. We try to give you an honest sense of how these people really are.
We've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday.
I'm ready. Are you?
Join me, Trevor Phillips, Sunday mornings on Sky News.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before? Yes. Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
Very welcome back. Let's have a look at the markets on this Friday. And Wall Street is in positive territory as the latest employment data points to a possible rate cut by the Fed this month. In Europe, more of a mixed picture, weighed down by a bit of gloom from Germany, with industrial production falling unexpectedly in October. Here, the FTSE also closed down, nearly 0.5%, mainly due to defence stocks and utilities. But there was a big gainer, that is Direct Line, after Aviva agreed to buy the insurer. That's finished up more than 5.5%. And let's have a look at the currencies. The pound down a fraction at 127 against the dollar. And it is up a little against the euro at 121. And finally, to the price of oil. A barrel of Brent crude will set you back at around $71 a barrel. Let's speak to Fazwaz Chowdhury. He is head of equities at Fulcrum Asset Management. Very good afternoon to you. Let's start with that Direct Line deal. A big increase in the share price today.
Yeah, I mean, the news first came out on November 28th, and then now another follow-up increase today as the offer was accepted at 275. It's a good offer. The board has recommended it. I don't expect an interlocutor to come in and pip this offer again, like Agias did in March.
And what's, I think this is going to make a pretty big insurance company, particularly in the car markets. Is this a deal that investors think is going to bring about a significant return, given the fact that it's going to be a much bigger group?
Well, that's exactly right. In the insurance market, and especially in autos, as you mentioned, but even in home insurance, they'll be the largest insurer, 20 to 25% market share, closer to 25%. And but we don't think competition authorities will reject that. And yes, it will bring returns because they expect about 20 to 30% of the cost of direct line to be reduced, and hence synergies, because there's underwriting overlap. And then on the way they're funding the deal, about half of it is in cash and half of it is in shares, and that ultimately the cost of that cash with the increased leverage on the group justifies it. So they should have earnings accretion going forward.
Okay, let's talk about oil if we can, because the oil price is down again, just over $71 a barrel. What's
right
behind that?
Well, the OPEC Plus met today and they announced that they're delaying the increase in supply, or rather the reduction on cuts they had already done by 3 months. But the market doesn't really believe that too much. They've been talking and delaying the cuts, removal of cuts, and hence increase in supply for a while. Ultimately, the oil market is oversupplied. China demand is fading. China is moving its transport sector into electricity through EVs and their oil demand. And China is the largest importer of oil in the world. So in an oversupplied oil market, and then President Trump wants the U.S. to increase production as well, which it might very well do. And so OPEC Plus is trying to delay the inevitable. And so the market is not really believing this delay in cuts. They're probably going to overproduce their quotas, and we're going to remain in an oversupplied situation.
François, is this a turning point here, do we think? Do we think that actually, because renewable energy is now so much cheaper, that in the end, we may well have just lost François, but we will try and get that connection up. I was going to make the point about the very fact that oil has become, quite a lot cheaper, despite the turmoil in the Middle East. And maybe in part that's because there is a lot of supply. And also, I would make the point that actually when you look at the energy coming from renewables, that it is a lot cheaper these days, and it's now competitive against the price of oil. Anyway, thank you to François Chaudhry there with the latest on the markets. Let's just bring you up to date with that breaking news that we have here on Sky, and that is that President Zelenskyy is to attend the reopening of Notre Dame's cathedral in Paris tomorrow. He'll be joined by Prince William, of course, from the UK, and President-elect Trump. A big moment for that city after, of course, the cathedral burnt down. A big moment for the French president too, Emmanuel Macron, who's been somewhat embattled this week with Michel Barnier, his prime minister, having to resign. But a big moment, a showcase moment, if you like, for Paris with the reopening of the Notre Dame Cathedral tomorrow. President Zelenskyy will be in attendance. OK, that is it from me on Business Live for this evening. We're back, of course, next week. Do join me on Monday if you can. Up next, it is the News Hour with Jonathan Samuels. The latest on that Storm Dara, due to hit very soon. Have a nice weekend.